And the board of directors include a lot of government officials. I don't know if that is good. Kasi, alam mo naman, madaming tanong tungkol sa government officials ngayon. But again, that is essentially what mutual funds are all about. So mutual funds will be able to give you high returns, will be able to give it to you at very low risk, with reasonable liquidity, manageable size because the entry levels are just 5,000 pesos per share. It is very, very easy to understand. There are several funds that are available to you. A bond fund. I will just go through this very quickly. A bond fund is just invested in government bonds. An equity fund is totally invested in the stock market. Bond fund kasi, you just receive the coupon payment from the bond or the interest from the bond year in and year out. Equity fund, the performance depends on the stock market. The biggest fund that I have right now is the balance fund. It is 10.5 billion pesos on one fund. Why? Because the balance fund can be an equity fund or can be a bond fund. If I feel like the stock market will fall, I will be in bonds or cash. If I feel like the stock market will rise, I will be in equities instead of cash. The headache of moving from equities to cash or bonds and moving back from cash and bonds to equities is on me. It will not be on you. And therefore, we are the ones who decide. That's why that's what a lot of people want. 10.5 billion invested in that balance fund. Because people don't want to watch equity markets or stock markets every day. They let it do us. They let us do it. So, other funds that you have, GS fund, that's government securities fund, a money market fund, which is essentially a cash fund, a dollar advantage fund, which is invested in dollar bonds, and dollar abundance. So let me just move on. I will show you the returns. On the bond funds, look at the returns over the past 5 years, from 2003, 2004, up to 2007. On an average, the bond fund return is 8.3%. The balance fund return, on an average each year, would be about 22.1% return every year. So, just to put it, yung sa balance fund in 2003, it earned 31.5%. 2004, it earned 19.1%, 10% in 2005, 34% in 2006, 17% in 2007. That's an average of 22% every year. Equity fund, that's an average of 27% every year. So, that is already net of all taxes. So, to put it bluntly, if you adjust it for tax, your bond fund will give you about 10.4% year in and year out. The balance fund will give you 28% return year in and year out over the last 5 years. And your equity fund would have given you 33% return year in and year out. So if you look at it, to put it in some other terms, no? Over the past 5 years, you would have earned 49% in the bond fund, which means your 1 million 5 years ago is now 1.5 million pesos. Your balance fund has earned 171% over the past 5 years. which technically means your 1 peso or your 1 million is already 2.17 million, I think. 2.7 million. 2.7 million. And your equity fund, 225%, which means your 1 million has more than double over 5 years. And I will tell you, no time deposits will give you the rates of returns that you have seen. And therefore, a lot of people are not aware that mutual funds have been there over the past 10 years. Maybe it's time for you to consider making your money work for you. Because those are the rates that we have generated for our investors over the past 5 years. So that is essentially Sun Life, making investing very, very easy for all of you. So again, thank you to all of you for taking some time out to listen to me. Maybe if you want, you can just coordinate and line up in the Sun Life branch where Rick is the branch manager. Again, as I was telling you, nowadays, your deposit rates won't make it for you because prices are rising.